What I'm saying is, if silver bulls are saying this is it, silver's finally going to have its day in the sun, it's going to have more, it's going to beat gold, be careful what you wish for, because if that's what happens, it means the end of this bull market is nigh.
If people allocated 3, 4, 5% to gold and silver, right? First of all, we flip that on its head, right? When you allocate to gold and silver, you're not allocating your money to gold and silver. You are divesting from the system.
Right.
You're not investing in anything. When you have physical gold and silver, you're divesting from everything else. You can't invest in money. Money is what you get when you sell your investment.
A small shift into gold and silver can tilt the entire financial system. Lobo Tigray observes that gold has been breaking out repeatedly, filling the financial world with headline after headline. This surge in attention, he says, tends to pull more generalist investors into the market, something that is both exciting and a bit unsettling. What feels even more unusual to him is the sudden appearance of silver-focused coverage on major mainstream outlets like CNBC and Bloomberg, a sign that the story is shifting beyond niche circles. Despite the excitement, Lobo Tigray urges caution. He reminds investors that every bull market eventually ends, regardless of how much money continues to be printed. For this reason, he is wary when some silver enthusiasts claim that silver's long-awaited moment to outperform gold has finally arrived. If silver begins to outperform too aggressively, he warns, it could signal that the bull market is nearing its final phase, something investors should be careful about celebrating. Lobo Tigray explains that if he is bullish on gold, and on real assets more broadly, then he must also be bullish on silver. However, he argues that if his fundamental analysis is correct and the broader bull market still has a long way to run, silver may benefit from cooling off in the short term. A pullback would not signal weakness. Instead, it would help reset the market and strengthen the foundation for future gains. Finally, Lobo Tigray notes that if silver does go parabolic and gold confirms the move, he would not hesitate to deploy more capital, even at all-time highs. Blow-off tops, he says, can offer powerful opportunities for speculative gains. This strategy is particularly applicable to mining stocks, where leverage is higher. Bullion, on the other hand, remains part of his long-term savings, accumulated steadily during dips. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors. Don't forget to tap the bell icon for more daily insights into the financial system. Thanks for watching.
Gold was breaking out and breaking out and breaking out. We had lots of gold headlines, and we talked about how that might bring more generalist investors in. It's sort of fun, but also a little bit scary to see silver headlines on CNBC or Bloomberg. There was a video that went around a couple of days ago about, will silver head higher? And it wasn't silver or gold bugs. It was one of these mainstream media outlets. I forget which one. It didn't tell us anything new, anything we hadn't heard already about the shortage in London of physical and people flying silver around, all that sort of stuff that we've talked about for weeks now. But people got all excited and people want to know, what do I think about this video and so on? Well, I think they're telling us what we already know. But to answer the question, I think I have two minds on this. On the one hand, I'm long, and despite people calling me Darth Silver and all these things, I own plenty of silver stocks. I'm very happy to see it long. I've never been a bear. But I have to say, I'm not sure I really want to see silver catching up with gold, because, even your most diehard silver bulls will tell you that silver lags gold at first in a bull market and then more than catches up at the end. It's not the catching up part I have a problem with. It's the end part I have a problem with. My analysis is not technical. It's fundamental. And I don't see any reason for this bull market to end anytime soon. That's like saying the money printing is going to end soon. It just never happens. That said, the bull markets do end despite the money printing. So what I'm saying is, if silver bulls are saying this is it, silver's finally going to have its day in the sun, it's going to have more, it's going to beat gold, be careful what you wish for, because if that's what happens, it means the end of this bull market is nigh. I feel a bit odd saying this when we're at or near record prices in gold and silver, but there's actually not a very strong case for gold going down. The strongest case we could have made recently was, oh, well, gold went screaming up to 4,400. That was too fast. There has to be a correction. And then the question was, would that be a peak or would it be a plateau to another high later? And I wanted it to be a plateau, but Mr. Market doesn't care what I want, right? So we had to see. And I think it's pretty evident right now. It certainly wasn't this kind of peak. It wasn't a 1980 intraday type peak. It looks like 4,000 is the new 3,000, and we're consolidating before moving higher. So overall, bullish, bullish, bullish all around. It's a crazy thing for me to say at these levels, but that's the way I see it. And sorry, let me come back to the point of your question. If I'm bullish on gold and I'm bullish on anything real, how can I not be bullish on silver, right? That having been said, if I'm right in my fundamental analysis and that we still have a long way to go with this market, then that argues for actually silver cooling off a bit here. Maybe it kisses 60, that sparks some profit taking and it cascades a bit. But if silver crashes all the way down to 50, the silver miners will still be printing money, like literally pulling money out of the ground, real money. So I don't think that would be a disaster at all. I think to the degree that something like that put the silver stocks on sale, again, that would be an opportunity. And what might make that happen? If it's true that, demand out of India is and front running of tariffs and critical minerals rebalancing, this sort of thing has put a squeeze on the physical markets, I think that rebalances. And again, I'm not a bear here. I'm not arguing against silver, but I think that would be a good thing. That would set the stage again for consolidation before moving higher. And if that's not what happens, if we're really at that blow off top, the good news is, okay, everything will go higher. The bad news is that whenever it, peaks, that we're likely then to go into bear mode for some time. So yeah, again, Mr. Market doesn't care what I want. I would prefer it wasn't the blow off top just yet. But if it is, if we start seeing things going parabolic again and gold confirms silver's move, then actually I would deploy more cash. As crazy as it sounds to say, yeah, I'm going to jump on all-time highs, if we're looking at that blow off top, then yes, I would put more money to work trying to profit on that. And I mean in the stocks. Bullion, I always buy on the dips. That's my savings. I'm always willing to accumulate bullion. That's not what I'm talking about. I'm talking about, speculating for hockey stick gains on the stocks.
What if a small shift into gold and silver is all it takes to start unraveling the entire fiat system? Rafi Farber notes that when lawmakers begin asserting ownership over national gold reserves instead of leaving them exclusively to central banks, it exposes a deeper truth: gold and silver function as real money, even if many people refuse to acknowledge it. Their role as hedges or crisis protection exists precisely because they are money, not investments. He says this misunderstanding also appears when investors talk about allocating 3 to 5% of their portfolio to precious metals. Buying physical gold and silver is not an investment choice. It is divestment from the fiat financial system. Holding metals means stepping outside the structure of Federal Reserve notes and debt-based assets. Because of this, Rafi Farber argues that if people shift from holding 0.1% of their wealth in metals to 3 to 5%, the process does not stop there. Once the public begins meaningfully divesting from fiat, the movement accelerates, eventually pushing people toward converting more of their assets into real money, gold and silver. For that reason, he says a stable 5% allocation is unrealistic. Once enough people begin shifting into precious metals, it tilts the entire financial system, transforming what looks like a portfolio adjustment into a broader structural exit from fiat currency. Let's get back to the interview.
Gold and silver are moving so quickly in both directions. The volatility is increasing. And the last piece of news that I saw is that Italy, whatever their Congress is called, is set to pass a law or a suggestion or some kind of statement that the gold that's owned by the Italian central bank, which is now subservient to the ECB, but it used to be independent of the ECB, that the Italian gold now belongs to the Italian people. And then the ECB is like, we're strongly encouraging you to not say that. And then the funny thing is that they're damned if they do. I'm talking about the ECB, damned if they do, damned if they don't, because if they say, no, you can't pass that, or if they express any kind of strong opinion other than that, we strongly suggest that this is not a smart thing. And then in the article I read on Reuters is like, quoting some ECB official saying, I don't even know what this means, but we discourage it anyway, because they have to pretend that they don't care about gold, but at bottom they know that it's what's backing them.
Right.
So if each country takes ownership of its own gold and hollows out the ECB in that way, it's basically what I'm preaching on the Endgame Investor. It's like you stack gold and silver, not necessarily to make yourself rich or even to get through the end game or to make sure that your family's okay. All that is a side effect, and it's a good side effect. It's a welcome side effect. But
Right.
the point is, we want to hollow out the system because we don't want them to be able to inflate and spend money on lockdowns and pharma subsidies and war and everything else that they spend on. Once they can print as much currency as they want. We call it money, but it's not money. But they can once they print, but it doesn't help them, then all of their power is gone. And we can see this happening now in Europe, with Italy requesting its gold, or not really requesting it, just like saying that it's owned by the people of Italy instead of the ECB. I think we saw that Germany demanded its gold back from the Fed.
Yeah.
Maybe in 2013, 2014, something early on.
Mm-hmm.
And Italy is a basket case. They have like the second highest debt to GDP in the world, I think. Maybe third highest, I think, is Japan, and then Greece, and then Italy.
Mm-hmm.
And I think they have the third or fourth largest gold hoard. Right. So once you see legislatures start to pay attention to gold and declare that they own it instead of a central bank, we're really getting to the core of the issue here, because as we say, gold and silver are money. The only problem is people don't want to admit it. And so they say, oh, it's just a hedge against inflation, or it's a way to protect yourself from tail risk, or it's a way to protect yourself from chaos. But like, why is that? Why is it a hedge against inflation risk? Why is it a way to protect yourself? Because it's money. If people allocated 3, 4, 5% to gold and silver, right? First of all, we flip that on its head, right? When you allocate to gold and silver, you're not allocating your money to gold and silver. You are divesting from the system.
Right.
You're not investing in anything. When you have physical gold and silver, you're divesting from everything else. You can't invest in money. Money is what you get when you sell your investment.
Yeah,
right?
well said.
When you sell a position, what you're doing, like how we do it colloquially in a brokerage, right? We sell a position in a stock with the sell button, close position button, and then we see that we have a whole bunch of more dollars in our brokerage account. Fine. So that's divesting from whatever the dollars were invested. But the dollar itself is an investment. It's an investment in the Federal Reserve as a solvent bank. That's what it's a Federal Reserve note. So if you want to divest from that, how do you do that? The only way to go underneath the Fed is with money. So that's the problem, Ivan, because when you start saying, oh, if everyone allocated instead of like 0.1%, 2, 3, 4, 5% to gold and silver, but because it's divestment, once people start to divest to that degree in the entire fiat debt system,
right,
then it doesn't stop there. It goes to 100% eventually, and they sell everything. Mm-hmm. Right. And then the only thing that has value as money is gold and silver. Yes, real physical assets have value, but very illiquid value. And it depends who you can sell it to. Right. Your house will have value, but if you have no food and all you have is a house and you have to sell your house for like 2 weeks of food, that's not a good deal. You could do it, but you'd rather have a liquid commodity to do it with, so that you'd still have a house and you'd have like 3 or 4 or 5 ounces less of silver. That's fine. Yeah. So you don't stop at 2, 3, 4, 5%. Once we get to 2, 3, 4, 5% of people buying gold and silver, because it's not because they want to allocate 5%, because their investment advisor said, oh, now I'm up to 5%, and this is what it should stay at. It's like it's as if you could like tilt the slide of the entire system and then not expect everything to fall down.
Right.
When a growing portion of wealth moves into gold and silver, it is not just an investment. It is a divestment from the fiat system. Even modest allocations are not simple investments. They represent divestment from the fiat system itself. As more people convert assets into real money, the shift accelerates, tilting the entire financial structure and highlighting the limits of traditional portfolio strategies. Physical metals provide liquidity and stability that other assets cannot, making them increasingly central in a world where confidence in fiat currency is tested. What happens when a growing portion of wealth moves into gold and silver? So stay tuned. Don't forget to like and subscribe for more daily insights. Thank you for your support, and I hope you enjoy the video.